you thinking to sell your Boston rental property and buy a new one without paying capital gain tax? That's where a 1031 exchange comes in. In this video, I'll break down how to buy and sell rental properties using a 1031 exchange step by step right here in Boston. Hi everyone, Hsieh-DeGnore here. I've done multiple transactions with 1031 exchange, buying and selling rental property in Greater Boston area over 20 years. Today, I'm thrilled to show you guidelines of buying and selling rental properties at the same time and save you thousands of dollars in capital gain taxes. Do you know how much capital gain taxes you have to pay if you sell a rental property for $1 million in Boston without doing 1031 exchange? It can be as low as $48,000 or as high as $500,000, which depends on your taxable income. Please consult with your CPA regarding your potential capital gain taxes prior to selling your rental property. Here's an example of how to determine applicable tax rates. Federal capital gain taxes. The federal long-term capital gains tax rates are 0%, 15%, or 20%, depending on your taxable income. Based on your taxable income as a single filer, for example, 0% rates up to $48,350, 15% rates from $48,351 to $533,400, 20% rates over $533,400. Federal depreciation recapture tax. Any depreciation you took on the property will be taxed at the maximum rate of 25%. Massachusetts state capital gains tax. In Massachusetts, long-term capital gains are taxed at the flat rates of 5%. Additionally, if your total income exceeds over $1,083,150 for tax year of 2025, a 4% surtax may apply. Net investment income tax, NIIT. If your income is high enough, a 3.8% NIIT may also apply to your investment income, including capital gains. Step 1. What is a 1031 exchange? A 1031 exchange allows you to sell one investment property and reinvest the proceeds into another like-kind property, deferring capital gains taxes. It's named after Section 1031 of the IRS tax code. But here's the key. It only works for investment or business use properties, so this won't apply to your primary residence. Step 2. Know the rules. Timing is everything. After you sell, you have 45 days to identify potential reinvestment properties and 180 days to close on a new one. You must use a qualified intermediary to hold the proceeds from your sale. You cannot touch the money or the exchange become invalid. Step 3. Sell your rental property. Start by listing your Boston rental with an agent who understands investment sales. The goal is to maximize your sale price, but also line up your sale timeline with your 1031 deadlines. Also make sure to disclose any existing tenants and know your rights under Massachusetts landlord-tenants law. Step 4. Identify like-kind properties. Like-kind properties doesn't mean it has to be the same type of property. You can sell a 3-family in Dorchester and buy a mixed-use building in Cambridge, as long as both are held for investment. Just remember, Boston competitive markets can make it tricky to line up a purchase quickly, so start identifying options before you even close on your sale. Number 5. Close and reinvest. Once you have identified your property and your intermediary is holding the funds, you will go under agreements and close, ideally within a 180 days window. At closing, your intermediary wires the fund directly. You walk away with a new property and no immediate capital gains tax. Bonus tips: Boston-specific considerations. In Boston, watch for zoning restrictions, tenant protection under Chapter 93A, and property condition and lead paint regulations for rentals. And always work with a local 1031 experienced attorney or tax advisor. Boston is a unique market, and small mistakes can cost big money. That's your 1031 exchange roadmap for Boston. If you are thinking about selling a rental and reinvesting, this strategy can save you tens of thousands in taxes. Drop your question in the comments, give this video a like, and don't forget to subscribe for more real estate tips. Thanks for watching and good luck with your exchange.